The first $100,000 is a bitch, but you gotta do it, and the rest is easy. Charlie Munger. Hey, welcome back to Crypto and Assets. Have you ever wondered how long it really takes to build your first 100K? Whether you're into crypto, stocks, or ETFs, today we're breaking down exactly how to get there, and how you can do it even faster. Stick with me till the end, and I'll show you how to maximize your investments, increase your savings, and even boost your income to hit that 100 target much sooner. Let's dive in. To build wealth, it's crucial to understand the basics. Let's start with this. Building your first 100K isn't about luck. It's about consistency and strategy. You don't need a huge salary, but you do need discipline. Whether you're investing in stocks, ETFs, or crypto, regular and long-term investments are key. You can't just rely on one big win. You need to consistently put money into investments that grow over time. Now, let's get to the math. Let's say you start with $500 a month, a manageable amount for most people. You're putting it into a broad, diversified ETF, which, historically, has returned about 7% annually. Here's how long it'll take to reach 100K. With a 7% return, you'll hit $100,000 in about 15 years by investing $500 a month. In those first 15 years, the key driver is compound interest. But here's the kicker. Once you reach 100, the next 100 comes much faster. Why? Because your investment has grown, and the compound interest starts working even harder for you. Let's talk about compound interest for a moment, because this is what makes all the difference. Compounding is when you earn interest on your original investment and on the interest your money has already earned. For example, if you invest $500 a month into an ETF with a 7% annual return, after 10 years, you'll have approximately $80,000. But here's where it gets good. After 20 years, you'll have over $230,000, thanks to the power of compounding. The key takeaway here is, the earlier you start, the faster your money grows. Now, let's talk about crypto. Crypto, especially Bitcoin and Ethereum, has had astronomical returns. For instance, Bitcoin has historically grown around 200% annually over the past decade. So, if you invested $500 a month in Bitcoin at a 200% return, you could hit that first 100 in just a few years, but this comes with more volatility. Bitcoin and other cryptocurrencies can swing wildly, but if you're willing to hold on through the roller coaster ride, the returns could be far higher than traditional investments. The downside? Crypto is unpredictable, and you need to be prepared for big fluctuations. So, what's the right approach? Diversification. A balanced portfolio might look like this. 70% in stocks and ETFs for steady growth. 20% in crypto for high risk, high reward. 10% in bonds or savings for safety and liquidity. Now, here's where most people fall short. Saving more and increasing your income. Even with the best investments, your wealth will grow faster if you're consistently saving more and investing more. Let's break it down. Increase your savings rate. If you can increase your monthly investment, you'll hit your goal faster. Try increasing from $500 to $600, $700, or even $1,000 a month. Every extra dollar invested speeds up your journey to 100K. Increase your income. This is a game changer. Whether it's through a side hustle, asking for a raise, or developing new skills that make you more marketable, increasing your income will allow you to invest more. Cut unnecessary expenses. Track your spending and find areas where you can cut back. The money you save can be reinvested. ETFs are a fantastic way to build wealth over time. They offer diversification and have historically averaged a 7% annual return. Let's take a look at how ETFs work for wealth building. If you invest $500 a month in an ETF, in 15 years, you'll have around $100,000. The great thing about ETFs is that they're low cost, diversified, and provide steady growth. Plus, you can automate the process, set up an automatic transfer, and forget about it. So, how can you hit 100 faster? Here's what you need to focus on. Start early. The earlier you start, the more time your investments have to grow. Even if you start small, it's better than waiting. Increase your contributions. As your salary grows, increase your monthly savings. This could mean cutting unnecessary expenses or finding new sources of income. Stay disciplined. Be consistent. Make investing a part of your routine. There you have it. The first 100 is all about consistency, patience, and strategy. Whether you choose to invest in stocks, ETFs, or crypto, the key is to get started and keep going. Remember Charlie Munger's advice. The first $100,000 is a bitch, but you gotta do it, and the rest is easy. It's all about setting the foundation early, using the power of compounding, and sticking to your plan. Once you hit your first 100, the next 100 will come that much faster. So, what's your strategy to build your first 100 key? Drop a comment below, and don't forget to like and subscribe for more content on crypto, stocks, ETFs, and financial freedom. Subscribe for weekly videos on smart investing, crypto, and how to build your wealth the right way.